The volatility of a T-bill is 5. The volatility of Bitcoin is 50. The volatility of MicroStrategy equity is 80. If you want to buy a convertible bond, you want to buy a bond from an issuer that has volatility more than 45. You want high volatility, you want high liquidity. And of course, you also would like the Bitcoin upside. If Bitcoin, if it doubles, the convertible bond will provide you a Bitcoin return, but only if it's sold to you by a company that's all Bitcoin. We're developing a city in cyberspace. We call that city Bitcoin. It's like if we were the first public company to show up in Manhattan and we started selling debt or public equity instruments in order to raise money to develop Manhattan, and everybody else was using cash or going at a slow rate, and if we found that the two innovations are, one, we issue public securities to develop Manhattan, and the second is we can build a building in 5 days. Right? So you can't do that in real space. It takes 5 years to build a building, right? And you can't hit the public markets for capital. But in cyberspace, I can raise the capital every month. I can build the building in 5 days. Our investors are Bitcoiners, right? So if you're a Bitcoiner, what do you think? You think Bitcoin's going to go up forever with some volatility. So what do you want? You want more Bitcoin per share. So how do you know whether the company is succeeding that's giving you Bitcoin per share? Well, we do the deal, we announce BTC yield. This is how your Bitcoin per share are accreted. How long does it take? It takes a few days. So the real MicroStrategy business is to be the leading public issuer of securities in order to acquire Bitcoin. And as we acquire the Bitcoin, we're driving up the scarcity of the Bitcoin. We've now bought more than 1% of the Bitcoin. Now there's only 450 Bitcoin available for sale from every day by natural sellers, the miners. You know, so 450 times 67,000 of Bitcoin, it works out to 20 million and change. So you can see what happens is if we're raising capital via tapping into the public equity markets and the public fixed income markets, and we're bringing that capital back and we're structuring our balance sheet and we're buying the Bitcoin, then that's good for Bitcoin. And of course that leverage that we get via issuing the debt, that's $4.2 billion of debt at 80 basis points. So we pay less than 1% interest for the 4.2 billion, which creates the leverage on the equity. And because there's leverage on the equity, that creates more performance. It also creates more volatility. Now, who wants volatility? The option traders want volatility. So in the options market, we've gone from a $3 million open interest in MicroStrategy options to some days 40 billion, right? So the options traders are trading high volatility. You can think of them as the options traders want 10x leverage on Bitcoin, 10 to 20x leverage, and maybe they want it long, they want calls, or maybe they want to short it 10x. They just, the haters want to short it, the lovers want to long it, right? But then MicroStrategy is like 1.5x Bitcoin. And then if you build a derivative on MicroStrategy like MSTU or MSTX, they're like 2x MicroStrategy. So that's like 3x Bitcoin. And so how well have they done? In like 2 weeks, they raised like $700 million in 2 weeks, no marketing. So on top of this stack, if you're looking at spot Bitcoin ETF, spot Bitcoin, you either buy Bitcoin or you buy IBIT or FBTC. They're offering you standard Bitcoin returns, 50 ARR with 50 volatility and 50 ARR, and 100% upside, 100% downside. That is the digital commodity. MicroStrategy, the stock, is 1.5x, and the way we get to 1.5x is we issue these bonds which give you half the upside of Bitcoin, little downside. What if I want half the upside, 5% the downside, right? Well, you buy a convertible bond senior in the capital structure of a company that's 4x over collateralized, right? So people that are risk averse they can actually buy the bond and get half the benefit. People that are Bitcoin maximalists can buy the equity and get 1.5% benefit. The degenerates, the traders, they can get 3 to 10x, and then the haters can short the common stock or short with puts, and we have sometimes $15 billion or $20 billion of open put interest. MicroStrategy is really just providing a set of institutional instruments that institutional investors can use to tailor a portfolio that's long, short, hedged. They can sell the volatility, they can arbitrage the volatility, they can arbitrage any instrument against any other instrument, they can generate yield, they can buy insurance. Some of those people that are short, they'll short $1 billion of MicroStrategy and they'll buy $1 billion of Bitcoin. And so if we didn't exist, then billions and billions of dollars of capital from the traditional finance markets wouldn't be invested in Bitcoin because they can't buy or hold the underlying crypto asset. They can only buy securities or bonds or options or other instruments. So we become an institutional gateway for crypto exposure by all types of investors. And you know, my real aspiration now is, if you really hate Bitcoin, I want you to love us. Like, we're the perfect instrument to short, right? Because I promise you I won't sell it, right? We're going to be levered long Bitcoin, and if you don't like it, or if you just want to hedge it, you get to sell our stock or sell puts or buy puts, right? And the worst thing I could do is to take your side of the trade or to interfere with what you're doing. So I think part of MicroStrategy's rise to prominence in the space is we have been laser-like focused, we're very consistent, we're very transparent, we're going to buy Bitcoin, never sell Bitcoin, we're going to borrow money intelligently. If you like Manhattan, and if a company said, I'm going to borrow $5 billion at 1% interest, and I'm going to develop real estate in Manhattan, you might think that that's the kind of company you would like to invest in. But if you hate Manhattan, and we're 150% exposed to Manhattan, you get this investment thesis, like, that's the company I want to short. And the most important point in the marketplace is you just have to be very pure, true to your focus, have integrity and consistency and transparency, because it's not my job to trade, hedge, arbitrage, or construct that portfolio. There are guys with hundreds of millions or billions of dollars in a Bloomberg, and that's what they do every day. So my contract with them is, we're going to do what you can't do. We're going to buy Bitcoin, hold Bitcoin, and we're going to issue equity, and we're going to issue debt instruments, and you can't do that. We're a public company, and on the NASDAQ stock exchange in America with a nearly 30-year track record, and we have 16 billion of permanent capital. That's Bitcoin, right?
So let's talk about MicroStrategy's rise then. In the past few days, it hit $43 billion, a 52-week high. All of those functions that you've spoken about are the reasons why you think that your stock can currently command a premium to its net asset value. 43 billion at its high versus that 16 billion in its net asset value being the Bitcoin holdings. Give me the rationale beyond what you've mentioned about those functions for you that you think it may be able to continue to expand to perhaps 1 trillion. US dollars.
Yeah, because, I mean, if you wanted to make it, put it simply, we're the only company that can issue Bitcoin-backed bonds. So anybody can buy Bitcoin and have all the downside and all the upside and all the volatility. But what if I want half the upside but no downside? There's a lot of people, if you look at the fixed income market, look at the corporate debt market, look at the preferred stock market, look at the convertible bond market. People in the convertible bond market, they have to buy a convertible bond. I can sell $1 billion of bonds in one day to people that have to buy the bond. They can't buy Bitcoin. They can't buy the equity. So who in the market is the leading issuer of convertible bonds? Well, we are. MicroStrategy, we've issued like $5 billion worth of convertible bonds. And so we've got that credibility. And what's going to back the bonds? Bitcoin. Well, what if I had $50 billion of cash and treasuries and I wanted to issue Bitcoin bonds? It wouldn't work. Why? Because the volatility of a T-bill is 5. The volatility of Bitcoin is 50. The volatility of MicroStrategy equity is 80. If you want to buy a convertible bond, you want to buy a bond from an issuer that has volatility more than 45. You want high volatility, you want high liquidity. And of course, you also would like the Bitcoin upside. If Bitcoin, if it doubles, the convertible bond will provide you a Bitcoin return, but only if it's sold to you by a company that's all Bitcoin. So MicroStrategy's this Bitcoin securities company, and if I want high vol, high performance Bitcoin equity, well, you have to have a company that's 150% Bitcoin. If you want high volatility, high performing Bitcoin converts, you need a company that's backed by Bitcoin. If you want to buy, a bond that pays 100, 200 basis points more than conventional things, you need a company that can sell you that bond that has a way to generate better than that. So there's an entire swap market out there where a lot of people would love to get paid 7% interest. Fixed income, retirees. People literally have $100 billion funds and they have to buy bonds that generate fixed income. That's the name of the fund, fixed income. Right? They can't buy Bitcoin. They can't buy the equity. They might not even buy the convertible bond. So MicroStrategy we can generate that bond, and of course Bitcoin's been going up 50% a year. Okay, so we have crude capital, digital capital on one side. This is 50% with massive volatility. What MicroStrategy does is we're scraping or stepping down the volatility, and we're stepping down the performance. Now you would think, why would you want 10% instead of 50%? Why would you want that? Well, MicroStrategy's gotten 50% every year for the past 4 years, but we took 50% vol, right? The world's full of people that would rather have 5% and 5 vol, or 10% and 10 vol, or 15% and 15 vol. So in essence, MicroStrategy's opportunity is to be that leading public company in securitizing this asset class and then providing the derivatives, fixed income, high yield, convertible, high performance equity. And you can't really do that if you don't have a public company with permanent capital. You can't do it with an SEC 40, an ETF, or a trust. See, they've got overnight deposits. They can't generate 5 years duration leverage on some kind of preferred or bond-like instrument. So I guess the last metaphor I give you is, Standard Oil created the oil business. So I give you a petrochemical refinery and think about what goes in one side. It's crude oil. What comes out the other side? Gasoline. Why do you put gasoline in the car? Because that's the only thing that works. Kerosene. What do you put that in? Jets. That's jet fuel, right? What? Propylene.
Bitumen
benzene?
goes in paint, or another product that comes out
All
of
of those petrochemical products come out this side. The refinery does a lot of work, and in comes crude oil. So think of MicroStrategy as we take in crude capital. There's no doubt it's the best performing asset in 15 years. It's theoretically the best form of capital is digital capital. It's just scary to a lot of people. It's too volatile, it's too difficult to manage, so they want someone that can, domesticate it, step it down, package it in safe components, and then connect it into the fixed income market, the high yield market, the convert market, and the public equity markets. And MicroStrategy, we just inadvertently backed into that.